Hi and welcome to today's morning report on Monday the 21st of September with me, Rich Perrin, market analyst at Tech Markets. Euro trading session has got off to a fairly mixed start really. The close on Friday was pretty negative actually from the States, 1.6% lower, and you actually saw that sort of feeding through into the Asian session overnight this morning. And initially there was a suggestion that there was going to be weaker trading on across the board on Europe, but it just seems to be that generally speaking, FTSE and CAC are slightly higher. But the DAX is quite sharply lower, about 0.7% lower on the DAX. So it could be the fact that markets are focusing on a couple of things really. The oil price has found some support today. Light sweet crude on WTI and also Brent, both up around about 1%, which would certainly help support FTSE. And also we've got the Greek election result, which, to be honest, is fairly stabilising. Actually, you've got the return of a Syriza government. 35% of the vote they got actually in that, and they've got already a pretty solid coalition going on with the Independent Greeks Party, and it seems to be that that's a pretty decent, or certainly stabilising victory for Syriza. Quite exactly what happens now remains to be seen, but certainly at the moment, the market's taking it with a fairly reasonably positive way. But certainly that's probably why the CAC is higher anyway today. But as we move throughout the day, we've got not a great deal of economic data really. I think the markets are still trading off the legacy of this Fed meeting last week, and its concerns over international developments, which is code for China speak really, and that is certainly why the DAX is underperforming, I think, at the moment. And anything that China related that comes out this week, certainly that points to the flash PMI data this week. Anything China related will have an impact, I think, on sentiment. Now today we've got just the existing home sales for the States. That's at 3 o'clock this afternoon. Last month we had a strong number. Look at that big number, big high on that existing home sales numbers, 5.59 million. That's expected to come back slightly to 5.52, but not too bad there at all. Pretty strong still on that data, and that's this afternoon. And that's the only real element outside of sort of trading on the Fed legacy that's going to impact on these markets. Now, in terms of what we have at the moment, let me just show you how the dollar's doing. Massive turnaround on Friday, big jump on Friday on the dollar, having been really weaker. Look at the chart of dollar CAD, for example, massive turnaround there. But it's fairly solid today, not really showing any real drive either way. Basically flat on euro and sterling. Slightly more positive on dollar yen higher, which is certainly helping to arguably add a little bit of support for these European markets. But interestingly enough, we're seeing the commodity pairs sharply off as well. So that's reflective of this slightly stronger dollar that we're seeing. And you're seeing that through the treasury markets as well. The treasury yields are slightly higher. That's the 10-year, 2-year as well, so higher as well. So that is suggesting an element of support coming in there. That's the oil price today. That's the price of WTI oil, so still fairly range bound on that WTI oil, although it seemed to be coming back towards a test of that key 43.20 support that we have as the range, but certainly picking up off that, and so again maintaining this stable element to markets today. So my chart today is the Kiwi dollar. I was talking about the commodity pairs coming under pressure today. Kiwi dollar is certainly one of those. Now we've had this just drift in the last week or so back towards the key breakdown levels, and these key breakdown levels certainly been the fact that the rallies have been sold into on the Kiwi, and that sort of trading range got sold into mid to late August, and it seems to be we're in the similar sort of outlook here, aren't we? Here, we do still have an element of a bullish divergence on this Kiwi. although it's taking a long while to actually play out. And what we do have is basically the momentum indicators broadly negatively configured. Kiwi really struggles when it gets anywhere near sort of 50 area, and again on Friday 48 was that high before it seems to be coming off. The MACD lines are negatively configured. Stochastics have not really sort of beginning to roll over a bit as well. So it seems as though this sort of mini rally that we've got going on is coming under pressure once again, and you could even argue also there's a closing element of resistance as well. The closing high over the past 3 weeks, 63.95 area, hasn't yet been breached. So again, the rallies are being sold into, and that continues to be the case. Here on the hourly chart, you can see the volatility around that Fed meeting. Wow, that was a really volatile move. We had a strong move higher on Friday, retraced almost entirely now. So it looks like it's sort of almost back to square one, although you would argue there is still an element of higher lows in this chart. You could well see this drop back down towards a test of that uptrend, and also possibly a test of this key support 63.08, which is now the key near-term level, because if that were to be broken on this sort of corrective move, then you'd certainly see, I think, the pressure beginning to build once again to the downside. But certainly at the moment, this is sort of still in this drift higher phase, although this sharp correction on late into Friday into the early trading today seems to be continuing, and the Kiwi is under pressure. So it'll be interesting to see how this one turns out. But in that key support 63.08 is the level to watch for. Now, in terms of turning this one round, you'd certainly point towards this little reaction high, and it is a little reaction high. It's not really doing a great deal, but 64 figure is somewhere where you should probably be looking out for there. But certainly, as I said, on this daily chart, the rallies towards this resistance seem to be still seen as a chance to sell. So it could well be that that is the case. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.